Hello, ladies and gentlemen. So today I want to take a look at what it would take to earn $100,000 per year in dividend income, which obviously when broken down comes out to $8,333 per month. Now, we're going to do two things. One, we're going to see what it would potentially take to get to that point. And then based off of my current portfolio, which is sitting at, well, that's the margin, but same amount right there, 438,864. And when we can potentially get to that point, because I don't know about you, but earning $100,000 per year in just dividends sounds pretty sweet. All right. So before we go into that, just so you kind of have an awareness here, my name's Dennis. I love talking about dividend income, even though this portfolio is not really dividend heavily focused. But what we like to do is talk about our dividends that we earn. I showcase how much I earn in dividends here on my spreadsheet, and just kind of love talking about dividends. So I love also kind of doing some calculations, which we're going to do here in just a moment, which we're going to go to this website here. Shout out to dividendathlete.com. Honestly, kind of has the best calculator out of anybody I've seen online because they are actually hard to come by. Good calculators, at least, and ones with not a bunch of ads. So I just did a kind of a fun, really quick one. So if you put in $2.5 million right now at a 4% dividend yield, and then kind of just scroll down over here, you get $100,000. Now, obviously, most of us are not going to have the ability to put in $2.5 million into, investments with a dividend yield of 4% and then get that $100,000 today. So we get to work through that, right? And so we're going to kind of actually do this in real time. Outside of this number here, I didn't actually even do any other kind of calculations on this to figure out these numbers. So we're going to actually play around here with some numbers and see what it's really going to take for this to become a reality. Now, for most people, it's going to take years. So I think first and foremost, we're going to start off, I put 15. We're going to start off with 20 years and we'll drop it down based off of, some examples. And then what we're going to do is we're going to go based off of my current dollar amount and my current yield, which is a little low, to be honest, for loving dividends so much. But still, nonetheless, I want to see what it would take for my portfolio to get to $100,000 as well annually in dividends. So let's go ahead and hop back over here. Like I said, we're going to be playing around with some of these numbers so we can take a look at here. So let's go ahead and say that, you start a portfolio out with $10,000 and then it's going to ask for the annual dividend yield. We're going to go with 4%. This is kind of like the bedrock for dividend investing, right? Getting 4%. And we know that, some companies pay higher and some pay much lower, but we're just going to average it out to this. We're going to keep it as a taxable account, but we're going to keep the dividend taxes at 0 for our example here today. But this is going to be where it's going to be probably the most fun is the expected annual dividend increases that will come in every single year. And by this, it's the things that, when company announce, hey, we're increasing the payout of our dividends, this is going to be that percentage. And I like to focus on companies that do double digit growth for the most part, but some companies do less. So for this, let's just go ahead and say it's an 8% increase every single year. And then the dividend frequency, we're going to go with it on a quarterly basis. So we're just expecting companies to be paying out on a regular quarterly basis. And then annual contributions, let's just say that you could put in $20,000 every single year, split out throughout the entire year. But for our calculations here, we're just going to do for annual because that's the only option here. And then the expected the expected annual share price appreciation right now is 8%. And that's pretty solid. I mean, we can go a little bit higher if we want to, like 9%. Let's just say you're just below the market average for whatever reason. And then this is, of course, the big one here, the DRIP. So if you're familiar with this or if you're not, DRIP stands for Dividend Reinvestment Program, or whatever you want to call that. But essentially, it's just reinvesting the dividends that you get paid out in this portfolio back into the actual holdings, so that way it can continue to compound. And it's a huge deal. And I can even show you the difference between having that toggled on and off. All right, so here, let's go ahead and scroll down and see some things. So one, they're going to give you some graphs, but we could just scroll down and this will give us our actual chart. And we're going to be able to scroll from here. But what's unfortunate with this one is that it doesn't keep that top bar up here with us. So we'll just have to kind of remember here. So first off, let's go take a look at the principal and let's scroll down here. So in 20 years, this thing is going to be worth $1.5 million and it's going to be $62,000 in annual dividends. And I'm going to scroll back up there just to make sure. Yep, annual dividends, that's going to be 62. So we're getting there. We're definitely closer than I expected on our first try here. And so we want to take some things into consideration. Do we need to be investing for a longer period of time with the same dollar amount? Maybe we need to increase the actual contributions that we do every year, or have higher expectations for our dividend increases and our share price appreciation. So we can really kind of maneuver these toggles back and forth, obviously with our dividend yield getting at the 4% at the start. So first and foremost, let's go ahead and move this to $25,000 annually, right? And I thought we put this at 8. I could be wrong. Oh, I guess do those two things go at the same? It's a little unfortunate, but we'll leave them both at 9%, I guess, at this point. So let's go ahead and scroll back down here and see. Okay, so that did bring it up quite a bit, right? $76,000 in annual dividends now. So not shabby at all, but we're still not hitting the mark here. So let's actually say that we are going to do $35,000 annually. Let's scroll down here. Ooh, there we go. All right, so right over here, you can see that our annual dividends, obviously it's a little bit more than 100,000. Excuse me for not getting exact, but right over here, it's 395,000. I screwed that up so badly. I'm not even going to edit that out. It's $105,395.01. Wow. What I also love too is it shows you your yield on cost. So all the money you've put in total outside of the growth and what you're getting paid out in dividends gets to 15% yield on cost. And that's a pretty great number right over there. So like I said, we can change some things out, but I want to quickly show you before we go to, again, my portfolio and take this holding. I'm actually just kind of coming on here so it doesn't sign me out while we're recording here. But before we go and plug in my numbers, I just want to show you what the drip here looks like. And this is how impactful the reinvesting your dividends will look like. So remember, we got to 105,000 pretty much, right? Check this out. If we didn't reinvest those dividends, kind of covered that up, we'd only be in 20 years at $67,486 in dividend payouts. So the compounding effect of actually investing our dividends nets us an additional almost $40,000 in dividend earnings in that 20-year time span because we took those payouts and reinvested back into the portfolio instead of pulling that money out, which for a lot of people, it already does that, which is great, but just kind of something to really consider. Like that's how powerful dividend reinvesting really is here for us. Cause that's massive, right? That's a massive change. Plus, I mean, who doesn't like sitting at $2.6 million in the portfolio as well too? Not too shabby if I don't say so myself. Now, obviously these are all like adjustable. So you can say, well, hey, what happens if I got 25 years on this, right? Like let's say you're closer to needing this at retirement and not anytime soon. You know, let's go ahead and just take a quick look. Boom. So just in a 5-year time span, you've doubled, right? Because here's the 20 years, 105 that we saw earlier. And then in just 5 years, that's how powerful compound interest is. Now that that portfolio is growing, it has the opportunity to keep growing. So it's almost like when you get to that 20-year marker, you're like, well, if I wait 5 more years, I'd literally double how much I get paid out. Or you just, pull out a little bit and not the entire dividend in earnings that you make that year. So now, let's go back over here and let's go back to my portfolio. So we're going to plug in my numbers. We're going to see what percentage of dividend yield we have on this portfolio. Like I said, it's a little abysmal, so I'm going to let you know now. But we're going to put in our total dollar amount here that we have. I'm going to just put this on a calculator. So not that I need to put the pennies, but I just need to put that in there so I have that on the side. And then we're going to go and look at our dividend yield. But before I do that, real quick, I just want to mention, if you're somebody who does like dividend investing and wants to kind of invest for the long term, I personally love M1 Finance. I will have a link for them in the show notes down below if you want to check them out. It does help me out, but it also allows me to continue to do more of this work. But you also can get started on a really great platform. I'll also have other resources like the news websites that I use, as well as my dividend tracker. I mean, I don't know about you. I just love this. I love seeing all my dividends that I earn all in one place. All right, so from here, I just need to go to research and then go to my pies. I'm just kind of talking out loud as I'm going through this entire thing. Okay. So in here, this should tell me ideally what my percentage is. Oh, that is awful. Did I not tell you that? Now, part of this is because a lot of the companies were not paying out dividends, although now I have several companies that are paying out dividends. So this yield, I think, will go higher once that full year kind of comes around for those companies. But we're going to play with these numbers too, because I do want to do that. So let's go to that dividend tracker or calculator. I said tracker. So 438,864 was the principal balance. This awful 0.682. So let's see here, 0.682. Oh, it doesn't even let me go percentages or more than one decimal over. So we're gonna go with 0.7. I'm gonna play that in my favor there. And then what we're gonna look at here too is actually increasing these percentages over here, because the companies I do pay out are a much higher increase typically on an annual basis. And I would actually venture to say, I just don't like that these two connect together. Man, I can never find like the perfect dividend calculator. I might need to create one myself. I would say that we're closer to like a 12 to 15%. So I'm going to maybe go halfway and say 13. I wish this would not go up too, but I would actually say for my annual share price is probably closer to maybe 11 or 12%. Actually, I want to do 13.5%. And we'll readjust these as well too. So we're going to leave it as taxable account, dividend payout frequency. I'm actually going to say this is more monthly. And then as far as how much we want to contribute annually, I would say we're going to start off with 24,000 a year annually. So I want to see how long it's going to take me to get to this part, right? So we're going to have the drip still on. And first I want to see what it's going to be like in 15 years. And then we'll kind of go beyond that as well too. So let's take a look at these numbers. So obviously we see the graphs, they look so pretty. And then let's go ahead and take a look here. So in 15 years, I'll have 3.7 million estimated, obviously, with a dividend income of 26,000. Nowhere close, but we'll figure out some of these numbers. But my dividend yield, hey, check this out. My dividend yield on cost would actually be 3.38%. And I talk about this a lot all the time in my videos where I don't need the dividends today. I'm looking for a little bit more growth right now. And then as I'm getting closer and closer to wanting to use this money, I will switch over to being more like heavily percentage dividend focused because I'm more interested in the companies that are going to increase 15-20% on their dividends on a yearly basis. So obviously getting to that point from the other example, we did have it for up to 25 years. So let's just kind of take a look at that. What would it be in 25 years? Oh, no way. Okay. Again, I did not actually plan this at all. So you could see here, the portfolio in 25 years would be worth estimated about 14.5 million, and our dividends would be $100,000. Now, I get all the comments all the time like, well, you realize that, in 25 years, $100,000 is going to be worth way less than it is today. Well, yeah, obviously, but zero is worse than $100,000 a year. I don't know about you. And then you can see our yield on cost would be close to 10%. Now, the fact that I want to get to this point way faster than 25 years, ideally in like 10 or 15, I'm going to say we're looking at like 15% increases. Obviously, that's not going to change right now. And then I'm going to say, let's put 36,000 a year. And let's see what our numbers come up to. I want to get there faster. That is not even faster. That is still much slower. Okay. So what this is telling me here is that if we really want to get to $100,000 in dividend income, we get to really increase our yield. And like I said, I think some of them will, because I think the number that I'm getting here from my M1 Finance account is maybe a little bit off just because of the fact that some of the companies that I've had in here just started paying out a dividend. So I'm going to definitely check back on making sure that percentage is correct. But let's just say closer to like 1.4. So just increasing it by a little bit more jumps that up pretty massively, right? We're looking at $74,000 annually. So we're much closer. So I'm not wanting to go above 15% here. So let's just say we get to 48. That's a lot right there. Okay. So that's still not going to do it. So what's interesting, thanks to my dog right there. So what's interesting is that we would probably need to go with some higher dividends here. And that's fine. If anything, this maybe we'll consider to go a little bit higher, right? So you can see here, this would get us at a $6 million balance and $100,000 in annual dividends in about 15 years, which would give us a yield on cost of 9.3%. So if I switch this out to almost a whole percent more, just by 1% more on my annual dividend payout, which right now it's 0.68, which again, I don't think is 100% accurate, but even if it were, and I get it to 1.7%, that means that in 15 years, granted that's a large annual contribution, I can get to $100,000. But you saw earlier what it would be like to get to $100,000 from, starting at $10,000 in a portfolio. Obviously, it takes work, it takes time, it takes dedication, and it takes consistency more than anything else. We want to be consistent with investing into our portfolio so that way we can keep growing it and having it get to a point where we're either happy with the dividends, happy with the growth, or a little bit of both, because all of that is always a really nice thing. I'm just excited for it. Now, one thing I do like to tell people is that whether you're trying to go with growth, dividends, or dividend growth, or dividend appreciation, which is what I'm looking at right now, I started off this account with $100, very small. Didn't really know, not that I didn't know what I was doing. I knew what I was doing here, but what I really actually wanted to do when I first started this portfolio was I kind of wanted to show people what it would be like. And then I ended up getting even more involved. And then I started adding more money into this portfolio. And then it just kept growing. And then once I started earning more money, I started putting more in. And then just kept going on from there, and it snowballed, right? And so if you're reluctant or scared to get started, just realize that that first step is putting in a small amount, learning as you go. You're going to make mistakes. You're going to maybe lose some money. That's totally great. It's better to lose with $100 than $10,000, right? And so get started. Like I said, if you want to use M1 Finance like this account, go ahead and check out the link in the show notes down below. Sometimes they have a nice sign up bonus for you because you're using my link, and that helps me out as well. Plus any of the other resources that I have in the show notes down below for you. Now, what's also really fun is continuing to watch the progress happen. So what I'm going to do for you as well too is after you check out all the resources in the show notes, I'm going to post another video right over here. This will probably be the latest video on my channel, which usually will show the latest updates on the portfolio or anything else we talk about when it comes to our investing journey.